Hey everybody, welcome back to Liquid Lunch, powered by CryptoQuant, the leader in on-chain data analytics, and we are super excited about today's episode. We've got, of course, our head of research, Julio Moreno. Julio, welcome. No Hawaiian shirt today, buddy. What's going on?
Yeah, thank you, Garrett. Yeah, sorry, I'm traveling, so I didn't bring my my Hawaiian shirt. Glad to be
Dan
here.
Held got into the mood today. Dan, we're happy to see you, buddy. That's a great looking Hawaiian shirt you got there.
I mean, I dressed up. I don't know why you're not dressed up, Julio. Like I'm rocking it.
Yeah, sorry, man.
But anyways, guys, if you would like to get the latest in on-chain data analytics, you can sign up with an account at CryptoQuant.com. Again, we are the leading on-chain data analytics company for institutions. And so today we're going to get into some on-chain data analytics provided by our head of research, Julio Moreno. And then we're going to get into the L2 discussion with Dan Held. So why don't we start off with that weekly research report there, Julio?
So yeah, this week we analyze a topic that has come up from some of our clients. They were asking about the potential, let's say, sell side liquidity for Bitcoin as demand is growing too strong, like unprecedented demand for Bitcoin, and you know that Bitcoin is scarce, and actually it doesn't move much, the coins, right, that are available for purchasing. So we analyze that situation, and so I'm gonna show this first. First, we analyze like demand. How strong is demand growing? Of course, we all know that with the ETFs, they are buying a lot of Bitcoin. They've been buying a lot in since they were launched. But how we wanted to see how much of that is demand really growing, right? So here you can see in this first chart, like this is the demand for Bitcoin. And the way that we calculate it is looking at addresses that just buy Bitcoin and they never move it. So they have never moved that Bitcoin. They just keep adding and they never move it. So that's the type of addresses that we're looking at this. And you can see here, this is the monthly growth in their total balances of these addresses. And so in the last cycle, you can see in the last cycle in 2021, 2020, 2021, this growth was, at most, and the monthly growth was 50,000 Bitcoin. So 50,000 Bitcoin on a monthly basis, this type of addresses were like purchasing, right? And so that was in the last cycle. And you can see in this period, especially since late last year, and also after the launch of ETF, you can see that how this type of addresses, the holdings, the growth in their holdings is just spiked, but it's unprecedented from as much as 50,000 in the last cycle to right now it's at above 200,000 Bitcoin on a monthly basis that they're purchasing this type of addresses. So that's a way that we wanted to assess like demand, right? You hear a lot about supply of Bitcoin, or how much supply does this type of holders have, but we wanted to have some metrics that tell you about demand. How strong are investors purchasing Bitcoin, and this is one of the ways that we think is you can see that by looking at this type of addresses, and you can see just how unprecedented the growth has been so far this year for Bitcoin. And now we have demand, right? But then the other side of the equation is, I wanted to show you this one. The other side of the equation is, okay, what's the Bitcoin that is available for purchase, right? Like really readily available, that you can just go to that place and just buy it right away. And of course, this is you can go to, of course, exchanges, which are really a big holders of Bitcoin, right? Exchanges, you can go to OTC desks, you can go to miners, or even we here consider the holdings of the US government, which also has been like a seller of Bitcoin last year, and they plan to sell the Bitcoin also. So if you look at the total holdings of this type of entities where you can go and purchase the Bitcoin, of course, it has been decreasing since 2020 two, more specifically because of exchange balances, right? And so you have like less available Bitcoin to be purchased, readily available to be purchased, right? And so you have in one side unprecedented demand, and on the other side, the supply side not really tight, right? But then we wanted to go further and say, okay, so how is that demand compared to the total available supply, right? That is in this type of entities. And I applied one thing that I learned when I was commodity research. We do this analysis specifically for metals, in which you look at total inventories of let's say aluminum, total inventories, and you look at also like at your estimation of demand for aluminum, and then you say, okay, as demand is growing right now, how much time those inventories will be enough to be enough for the demand, right? At current rates, right? And it gives you like a estimation of in months, for example, like, okay, this inventories are enough just for 6 months or 5 months, right? Or whatever.
But when are we gonna run out of Bitcoin, Julio? Is that what you're telling us?
I mean, we are in terms of demand, because demand is spiking. So, and you can see this metric. This is this blue line is precisely that metric. Like, okay, the available Bitcoin in terms of how much the demand will be, how much they will be enough for the demand at current rates of growth, right? And then you can see like it's plunging, especially since late last year and so far this year, we went to almost right now it's like 12 months of current demand growth rates. So that's the idea that we want to put out there is like demand is just so strong, even compared to previous cycles is by far, right? And so that's one of the things that we see, and of course we've seen this effect on the prices, right? And so as long as
that anybody has the halving or the absolute finite protocol, right? The absolute finite ability of Bitcoin priced in. I don't know, Dan, what do you think? I mean, do you think these guys even know that there's an absolute finite amount of Bitcoin?
Well, the phrase I've kind of fallen upon over all these years to describe the halving and is the information of the halving priced in. The halving is priced in for those who care and are paying attention. It's not priced in for the rest of the world. So that's where I don't think that the halving is priced in based on future demand. I think very little people are paying attention to Bitcoin. And that's where I don't think they at all grok, true scarcity, and that the issuance here is about to decline even further. So yeah, no, I don't think the halving is priced in.
And at the same time, like even the halving is not priced in, and we have demand like growing like never before. So it's like a perfect storm there. Yeah. So and you can check this this analysis in our webpage.
You guys set up an account, CryptoQuant.com. You can go follow all of Julio's different metrics that he's put together for these different graphs. So it's a great way to check this stuff out.
Have you guys run this analysis for previous cycles? Because it only covers the last cycle.
Yes, we have it since 2014, and actually, this type of addresses basically
it's hard to see the x-axis, but that looks like the 2021 cycle, the double top.
Yeah, it's 2020, since 2020. Yes, exactly. Yeah, we have it from 2014, and it was like less, and for this type of addresses, like demand was far less. So each cycle has been growing, but in this one, it's like it has gone like orders of magnitude from the last cycles. Yeah.
Do you have any idea of like the sensitivity? Like, is there a sensitivity metric that you've created to where like incremental demand now, due to constraints in supply, like what amount of incremental demand will move the price? Like, have you thought about that?
Yeah. Actually, well, Key, our CEO, was asking me about that actually yesterday, and I think it's like the next The next metric that we will develop for this is like, okay, demand changes, right? And then how the price changes, or how the this metric, the available inventory changes. So that's another analysis for sure.
Some kind of a multiplier effect, yeah.
Yeah, exactly. Everything that we had for this week that we wanted to show.
Awesome. Very cool. Yeah. So I think, people don't realize the finite scarcity of Bitcoin. They don't realize the halving. They don't realize that over 65% of coins haven't moved in a number of years. But no, this is super exciting. Dan, thank you for joining us today. You're like an OG in this entire space. So why don't you give everybody that don't know you, by the way, you guys can follow Dan Held on Twitter. Dan Held is just at Dan Held, just like it's spelled. And so why don't you give everybody like a little bit of background of just where you're at since you've been in this industry for so long?
Yeah, so a little bit of background on me. Started in the industry in 2013, built a product called Zero Block. We got bought by blockchain.com. At blockchain.com, I was the first product manager, did another crypto startup. I then went to go work at Uber headquarters in San Francisco. This is where I'd lived for a majority of my experience. 2016, 2017, left there, went back into crypto and did a startup that got bought by Kraken. And then at Kraken, I built out the marketing team from 2 to 30. After leaving Kraken in the middle of 2022, I did fractional CMO work with some of my clients, including like Taproot Wizards and Trust Machines, Bitcoin DeFi projects. So I've been leaning into the Bitcoin DeFi sector quite a bit, both in that and with my personal brand. Personal brand wise, I've got about 1 million followers on social media. People like to follow me before because I explain Bitcoin simply, and I still do that, but now I'm talking about that and Bitcoin DeFi, or decentralized finance, on top of Bitcoin.
Love it. Yeah. And so you've got a wealth of knowledge about this entire industry. And so I'm just going to, because we're talking about layer 2s today. And so let's just start off with the question, like, first of all, why do Bitcoin maxis hate tokenization so much? And second of all, like, what is the utility for tokenization, just as a general broad sense for people to understand this?
Yeah, so maxis, believe that like any other token other than Bitcoin is a scam. And that origin of the kind of the Bitcoin maximalist position was in pretty good, I would say, sound reasoning, because I've been around for almost 12 years in this space. In the earliest cycles, I mean, most of these coins were garbage, right? Like just totally garbage, like minor forks of Bitcoin or just kind of meme coins. So they weren't wrong. They were like, look, there's a bunch of trash here. In 2017, 2018, though, we sort of saw the rise of smart contract platforms, like with, like with Ethereum becoming really popular, and NFTs. What's funny is that NFTs actually started on Bitcoin with Counterparty, which is a Bitcoin L2. They had rare Pepes. So NFTs started on Bitcoin, got popularized on Ethereum, and now are coming back to Bitcoin. But most of the maxis, the earliest form of maxis, which there's very few of them, for good reason, felt like a lot of these like kind of like take Bitcoin, fork it, and add like other parameters, was a cheap clone knockoff. And for the most part, they were right. Then you had like the 17 through like 19 era of like ICOs. 99% of those were pretty garbage as well. So like the maxis, I think, were still pretty much in the right. But since then, and for the 2021 cycle, we saw the emergence of DeFi, where like you had things like NFTs. NFTs are a distinctively different asset. It has the same sort of core principles of Bitcoin as an asset, where you're like, okay, it's scarce and we subjectively value it for different reasons. And so I think that, NFTs were a clear example of an alternative asset type that was not competitive with Bitcoin, and I don't believe is a scam at all. If people want to subjectively buy this scarce image or other asset, and everyone else recognizes that them owning that with their private key is ownership, then that's the same thing as Bitcoin or any other crypto asset. So NFTs, I thought, were a great example. Other ones are like, for example, governance tokens or L2 tokens. Governance tokens could be for a DApp or an L2, where you take that token and it's a quasi form of equity. So I think that a lot of people resonate with that because it does give you ownership over a protocol. Like a protocol, it's hard for that to like issue shares exactly. So you have to have this token that represents ownership of the protocol itself, and also the voting mechanism to vote in different things. So I think those are like pretty two clear examples of alternative assets that aren't competitive with Bitcoin. And even in a world where let's say Bitcoin is ubiquitous and we have hyper-Bitcoinization, equity and bonds are still going to exist. Now, will those exist in the old CeFi platforms, or will they be issued and created on top of DeFi or Bitcoin or other chains? I think that's the most plausible outcome to enforce ownership. Now, granted, there are caveats here of like, if it's a real world asset, you rely on your local government's enforcement of you owning the asset. So just want to caveat that really quick, because a lot of people might jump to real world assets and go, yeah, we can solve this with the blockchain. Well, it doesn't matter if you put your house in the blockchain, I can just go over and take your house. So in terms of digitally native assets are the only true forms of like decentralization to own on top of Bitcoin. And so if these protocols, if they don't have any equity and it's more of just like governance tokens, that's more representative and I think a better fit. So the maxis weren't wrong from the older cycles, but the new wave of maxis are just kind of anti-tokens culturally and from a cultural value and ethical value. They don't believe in like the ability for people to even be able to buy these things, which I'm not going to go out and tell people to go buy these things, or I'm going to like, I might point at something and say, this is interesting, but do I believe in their ability to buy something if they wanted to? Absolutely. Like if someone wants to buy something that I don't personally like, that's fine. For example, like I'm not going to go scrutinize my brother or sister's pink flamingo purchase for their front lawn. I might subjectively think that it's a bad purchase, and that I think most of us would, but it's not like an unethical purchase, and it's not a scam. I mean, it's just in really poor taste, right? Like you can freely buy and sell stocks, and those stocks are better or worse quality stocks. It doesn't make the stocks category a scam if some of those are like really trash. So yeah, I think the old maxis, which by the way, most of the new maxis don't represent the old maxis at all. The old maxis were pretty libertarian, but the newest wave, they've made Bitcoin just kind of synonymous with like kind of ultra right-wing sort of ideology, where like they believe that fiat has led to the moral degradation of society in terms of art and relationships and how we treat other people, which is completely absurd. I mean, slavery existed on the gold standard. Like sound money did not solve that. Women didn't have the right to vote and were largely considered property for a long time. Under the gold standard, we had countless wars that were incredibly costly under the gold standard. So no, Bitcoin does not solve those things. Bitcoin solves the problem of money, and money does indirectly solve other problems, in terms of like more capital being allocated in a more efficient way versus governments controlling the printing press. I do think that will change society to some degree, but it's not going to change human beings. And so I think a lot of the more modern maxis, or we call them like Puritan maxis, are a little bit more focused on moralizing everything. And I think that's really silly. It flies in the face of being libertarian, where you can't moralize every transaction. The whole point of Bitcoin is that it's a neutral platform.
Yeah, no, that's great. And so, this isn't pie in the sky anymore, right? The monkey JPEGs and everything else we make fun of. Larry Fink, right? BlackRock has put $100 million into these smart contract platforms. And so we need to realize these smart contract NFTs, and tokenizing equities is going to happen. Like this is not something that is, just vaporware. Big companies, big public companies are putting a big amount of money into this, and they're going to flourish this ecosystem because it reduced costs. If you don't have to, if you can settle things instantly on the blockchain versus all these back-end systems, plus it's a worldwide ecosystem, right? If you want to buy maybe a bond in El Salvador and support the volcano, maybe you can do this now with these smart contracts. And so I think what people need to wrap their heads around are these L2s, is that really this is kind of like almost going to eventually replace the stock market, replace these equities that people are trading, because it does reduce costs. It does increase freedom, right? Freedom go up actually, because people will then actually take custody of their own equities. Whereas now, how many people actually own their own equities, right? Probably a very small amount. And so what people don't understand too is that the rent seekers of Wall Street, 75% of their revenue comes from them lending equities back and forth.
Yep.
So you talk about rent seeking, like you can eliminate that entire layer of corruption or whatever you want to call it, to give that power back to the people so that they can interchange their equities without having to go through these different counterparties.
Yep.
And just a question, Dan, for people that don't know, what's the difference between, a layer 1 and a layer 2? Like, what's the difference? And just a description, if you can give it.
Yeah, so I'll give like a simplistic description. I know this isn't going to be completely technically accurate, and also like there's a lot of opinions on what an L2 is. But with that being, let's set that aside and go to just kind of a basic definition for folks. So an L1 is like the native blockchain. So that's like the Bitcoin blockchain, and it's the activity that happens and is clear and settled on that Bitcoin base layer. So that's Bitcoin L1. So that's the base layer of Bitcoin. I send a transaction, transactions then added to a block, and then if I configure my fees correctly, eventually a miner will win the block, and then my transaction will be included in that block, and so my settlement occurs on the Bitcoin base layer. When we look at L2s, for example, will have some connective tissue or some connectivity to the Bitcoin L1, where activity will occur on the L2, which then eventually settles on Bitcoin L1. But the activity is sort of like this off-chain activity, and then eventually that it gets settled or printed or connects to the Bitcoin L1. A good example of this is like a Lightning channel. So a Lightning channel is a state channel. Lightning is a Bitcoin L2 protocol. So what happens is on chain, we both essentially post like collateral to a channel being opened. And the channel, let's say we put in a Bitcoin each, we're able to move money back and forth. And then after a certain time period, we can settle the net value between us on Bitcoin L1. So you and I could do millions and millions of transactions, and that's only represented by a few transactions on Bitcoin L1. So that's what an L2 might look like, where that activity did not occur on Bitcoin, those millions of transactions, but the net value of those millions of transactions then printed onto Bitcoin or was settled based on how we close those channels out. So that's probably my most simplistic way to phrase it, because there's a lot of different ways to create an L2 and a lot of different ways that they connect to Bitcoin, and people will differ on the definition of an L2. So that's kind of like my most simplistic definition.
Yeah, so in a sense, it's what it's doing is making it more scalable, giving it more like throughput, or
like why would someone want to do that? The three big things are speed, cost. So on an L2, you don't have to adhere to the settlement times on Bitcoin L1. You can have your settlement occur instantaneously, and then eventually that'll settle on Bitcoin L1, but your L2 can have settlement that's really quick, low fees because your throughput is much higher, so you can have many more transactions per second. And then finally, with Bitcoin and other chains that are a little bit more constrained on the permissiveness on layer one, for example, Bitcoin's on an EVM chain, so you can't do all these advanced smart contract functions. So Bitcoin L2s do allow for that. So you can do more expressive things. You can create AMMs. You can lend and borrow against your Bitcoin as collateral. You can basically do everything you can do on Ethereum or Solana. So an L2 is faster, cheaper, and will allow you to do more cool things.
Yeah, just a question, because you talked about, counterparty being the first, let's say, layer 2, and there were some applications there like NFTs, even stable coins, right? Like Tether was issued in counterparty first.
Yeah.
And so what do you think that now the resurgence of interest in layer 2s on Bitcoin, like it kind of, for my view, is it kind of went down and then it's resurging again? Like, what do you think is that? What has changed?
That's a really good question. It's a question I've gotten asked a lot, of like, well, why now? Like, why Bitcoin L2s and why now? I think when we look at the explosion of L2s over on Ethereum, a lot of those were incentivized and grew in adoption due to having like a native underlying token. And also they were focused on solving a problem for their L1 users. So Lightning, for example, is used in some speculative trading activities, but is largely used to facilitate payments, which I don't think many people really want to do with crypto. they don't want to spend it on coffee. It's just not something that crypto solves elegantly. My credit card works just fine. And so they talk about all these reasons why people want to use crypto for payments. No one uses crypto for payments. What people want to do with crypto, and Bitcoin included, is to go speculate with it. So buy and sell it, lend, borrow. These are different speculative games that people want to play. So any L2 that has configured itself to be a little bit more, geared towards speculative things or DeFi enabled, I think will attract more folks. There was a bit of stagnation though, because Lightning's not the only one. You've got Liquid and Rootstock as an example of other L2s that have existed for quite some time. Rootstock is an EVM chain, so you could copy paste an Ethereum dApp and move it over to Rootstock. Rootstock raised a bunch of money and I think deployed it very poorly. I've seen very little ecosystem development occurring over there, so I think they kind of fumbled their opportunity by just not applying the capital that they raised, I think, in an efficient manner to go, capture market share, build incentives. They even have an underlying token, but they don't use it very well. It's called RIF. So I think that Rootstock just had very poor execution, and that's why it's not more popular. Liquid had a problem where it didn't have a native token, and then also I think that they just never really figured out how to bootstrap usage and dApps being built on it. With this newest wave, I think people realize, like, look, there are dozens of L2s over on Ethereum, and there's L2s on Bitcoin, like, for example, today called Stacks. Stacks, for example, is, and again, your definition of an L2 is somewhat, I would say, loose here. Stacks has a native token called, Stacks that essentially is like a gas token. And so you can take Bitcoin, move it in and out of the Stacks blockchain. And what's interesting about that is the Stacks chain allows you to do a lot more expressive things. So Stacks, the token that represents the chain, has done quite well. It's already went past all-time high, and it's worth about a $5 billion market cap. So I think people see the success of Stacks and how many people are paying attention to Stacks now due to the token price appreciation, that being used to incentivize dApp development, users coming in and choosing to speculate on that chain because it's growing in awareness. I think that's where people saw a pretty big opening here, where like Stacks is doing well. These other chains kind of fumbled. These other L2s kind of fumbled. And so they think that there's a pretty open opportunity here. And I think we're already seeing that. You've got a lot of contenders coming out of the woodwork. At Asymmetric, my fund, we are focused in investing in Bitcoin L2s, meta protocols, and dApps. So we are kind of knee deep in it. When we look at how this will play out, I don't think there's going to be a winner take all. As with on the Ethereum side, there are a lot of different Ethereum L2s, some more successful than others, but I don't think there's a winner beat all. And I think as well, we're going to see a whole spectrum of different types of surface area for design and go-to-market strategy. And so, what I think we'll see here is an explosion of Bitcoin L2s, probably having, some of these will be worth tens of billions of dollars market cap. One might even be worth 100 billion by the end of this cycle, and a lot of them worth in the billions range. So I think what we're going to see is just kind of that explosion happen while the Bitcoin bull run occurs, and that will fuel in usage of these L2s where people go, you know what, I want to do more cool things with my Bitcoin. And so people will use these L2s. And so there's a virtuous flywheel effect of like token value goes up, people become aware of it. They use that to pay dApp developers to build dApps. People use the dApps, and it's this nice flywheel. So I think that, when we look at, what were they now? These L2s today are, I would say, like, most of them will be a governance, sort of like a glorified multi-sig, if you will, like a federated model, which is basically what Liquid, that's what Polygon did. One of Ethereum's first L2s. That's what Polygon did at first, was it was a glorified multi-sig, and Liquid on Bitcoin is essentially that as well. Most of these L2s will look like that in the beginning, which isn't the best decentralized architecture to pick, but at the moment, it's kind of the best you can do depending on what type of L2 you're trying to build. In the future, we've got things like OpCat and other Bitcoin soft fork proposals that would allow for trustless bridging and the ability to build true L2s that might have like I mentioned just a second ago, trustless bridging, or unilateral exits where you could exit the L2 without having this multi-sig sign off on you exiting. You could do it without anyone's permission. So L2s today on Bitcoin, largely, I think we're going to see the history of Ethereum L2s rhyme over here on Bitcoin. And over, later and down the road, we should see these become truly decentralized. But right now, it's decentralized enough, I think, to incentivize users to use it and people to build on it. I don't think it's decentralized enough to be a long-term solution, but I think that these L2s will swap out their multi-sig architecture for a true trustless bridge further down the road.
Awesome. What do you see as the I guess the regulatory issues potentially? Because the SEC is going after Coinbase, right? Just yesterday they announced that they're going after some of their altcoins, and so technically some of these L2s are maybe considered that altcoin security. And so what do you think is going to happen in that realm?
Yeah, that's a great question. I mean, I'm not a regulatory attorney, nor do I understand exactly how the SEC is currently phrasing their, how they go enforce things. I think most of the crypto space, they're looking for guidance from the SEC, and they haven't really provided much. That's where you see companies like publicly traded companies like Coinbase in litigation with the SEC to further define what they believe is a security or not. So yeah, I'm not qualified to opine as to like which one is or isn't a security, or where we are currently in that regulatory battle. What I do know is that people like these things. People like to engage with these assets, and they think that it does give them ownership in a way that they find meaningful. So the libertarian in me definitely thinks that behavior is okay to do. But the regulatory side, I don't know enough to comment as to which one is into security.
And then, I mean, the regulatory side is like a risk, right? But is there any other like risks of using a layer 2 on Bitcoin, or for the user, or for, I don't know, the protocol? Is there anything that we should be like more aware of?
Yeah, I mean, the risk that I consider, because the regulatory one is somewhat out of my control, and also I don't work in that sector in terms of like the legal side. Things that are under our control are a little bit more auditable, would be game theoretic security models. One of these L2s will likely blow up, just kind of the nature of the game. So I certainly hope that each one builds out their game theoretic security from a very rigorous perspective. When we look at Bitcoin itself works based on game theory, right? Like Bitcoin, there are certain situations where you could 51% attack Bitcoin. It's just that based on how Bitcoin's architected, the probability of that happening is very, very low. So that's where even Bitcoin itself can break in certain moments. So when we look at the security model for these L2s, what sort of way have they constructed their federated model? How are they thinking about trustless bridging in the future? These are things that I would be pretty concerned about, which would be around, if there's a $50 billion in TVL on this L2 and that blows up, that's not good. So I certainly hope these teams are taking a really mature, safe, and responsible approach to L2 design, and how they plan on essentially securing this for the long term.
When you say blow up, is like a hack or stealing,
Yeah, like
or what's that?
Yeah, it could be a flaw in the code that either is exploited, so that'd be like a 0-day hack. It could be they accidentally burn the funds or something where they haven't set up the smart contract correctly. There's all sorts of ways where this is permissionless and irreversible, so you have to move very, very cautiously. So yeah, I think we'll see a spectrum of folks being more risky and less risky. I certainly hope that the L2 builders have a mature, appropriate, I would say, response to building in the space, which I think is definitely more around thinking through how we construct L2s with smaller surface areas where they break versus some that have like kind of glaring flaws.
Awesome. And what is your opinion on, like, say, a new investor, right? They've got some Bitcoin, they've been around for a little bit, and they're like, you know what, I finally want to get maybe an NFT or an inscription, or maybe look into stacks. would you say, 50-50, maybe put some money into like some inscriptions, maybe like the Taproot Rizzers, maybe like a runestone, or would you go with maybe, hey, let me buy some of this token called stacks and like maybe go into that ecosystem? Is there kind of any advice you'd give to maybe newbies in this environment?
Yeah, that's a really good question. And, what's tough too is, will you beat the return of Bitcoin itself? That's
Yeah.
what you should always look at as your benchmark for success. There are going to be other assets other than Bitcoin. Equities exist, startups exist. What's funny is the Bitcoin maxis who think that they're like, hey, if you show any other asset other than Bitcoin, you're a scammer. I'm like, don't you have a startup? Didn't you sell that equity to an investor? Right? Like you're building this company. Don't you believe in what you're building? Like, otherwise you should have just taken all that money in and bought Bitcoin with it. Right. So, Bitcoin is probably your best return per unit of risk. So when we look at, do you have to go analyze every L2? Will you have to analyze different dApps? You're competing against guys like myself who've been in the space almost 12 years, and we're identifying and looking at these different L2s that we think are good investments. This is pretty tricky for the average retail person to do, and you may not even be able to access it since, for example, we're a fund and we can allocate capital, in a way that they can't. So, I do think a lot of these are very compelling. There's a saying that is, don't tell me your opinion, show me what's in your portfolio. So on Asymmetric's website, we will start publishing different things that we've invested in, dApps or L2s, and I think that's the truest testament of our opinion. Recommending people buy something, this is a very subjective decision that everyone has to take into effect. If you want to look at, I think, where a lot of opportunity exists, look at places that have high friction. So right now, ordinals, which include like NFTs and BRC20 tokens, it's still pretty tricky to use. And if you encounter that using dApps on like a Bitcoin L2, and they're actively solving or trying to work on that problem, that's a big source of alpha, is if you're just technically savvy enough to go deal with the headache of having to do these things. Like, for example, I minted a lot of BRC20s for fun when BRC20s first came out. And, it was a pain in the ass. Like, it wasn't easy, and there were almost no tutorials on it. That's where you might have an edge. That's where there might be some alpha, is just in your ability to spend the time to really learn it technically and be there first. It is a very difficult game though. And again, like, I can't emphasize enough, even if you played this game well, like, for example, I minted a bunch of BRC20 tokens, most of them went to zero, but a few of them did really well, but even the few of them that did really well, that percentage, so let's say 20%, or let's say 10% 100x'd, and the 9 out of 10 went to zero. So the 10% that 100x'd, really that's just a 10x because I lost the rest of that, right? So like, you might have to go look at, if I just held Bitcoin, what is my return there? So that's something I think about constantly, because I minted BRC20s for fun. I own some Bitcoin ordinal NFTs, and I've obviously have some other investments as well. So yeah, I would say, like, if you're curious about it, go play around with it, get to understand it, figure out if you know something that other people don't, and that's the source of where you might make some money with it. But yeah, recommending specific things, like I said, check out whatever we invest in. We'll be announcing on the Asymmetric Twitter handle and on the website. Again, I'm not recommending that you buy these things, but this is the truest testament of my opinion of what we think is valuable over at Asymmetric.
And the Asymmetric Twitter handle again is?
It's a Go Asymmetric.
Go Asymmetric. Okay, cool. I'm personally a little bullish on rare pepes. Okay, just a little bit biased.
You're a man of great taste.
I do love the green frogs.
That's like an OG, 1970s bottle of wine sort of vibe.
I love it. Do you have any rare pepes, Dan? Are you a rare pepe guy?
I respect the rare pepes a lot. Let's put it that way. I respect them a lot. I haven't been. For me, I like the ordinals. I like having the graphic asset exist on the Bitcoin blockchain.
Yep.
So, and I was early with a couple different projects. For example, I did some marketing help over with the Taproot Wizards, and I personally really like the Wizards and Quantum Cats collection. Those are ones that I personally have. So I think that those are really interesting, unique. I think like Udi and Eric are brilliant founders that have tapped into some mimetic cultural ethos of Bitcoin that people find, for example, Quantum Cats represent the OpCat Bitcoin soft fork proposal. that would then allow for Bitcoin to maybe have trustless bridging. So that NFT is sort of a social signaling mechanism that people can use to signal, hey, I'm into this OpCat thing. And they took the OpCat conversation from basically non-existent to becoming a common topic where people now know about OpCat. So I think that's really cool. And that's why I like the project personally. Francisco, the designer, is also brilliant. He's got a couple of really cool collections like flares and umwelts. So I think there's going to be kind of like you've got some classic pieces. You've got the two like Taproot Wizards, which haven't been sold yet, and then the Quantum Cats, which were sold. I think these really culturally tap into some deep Bitcoin values that I personally like and find really cool. So I personally like those two projects because of that cultural significance.
Yeah, they literally meme themselves into the ecosystem and been a major force that triggers the hell out of Bitcoin Max. It's kind of funny to see, actually.
Yeah, it's quite comical, right? Like it's just very comical to see them get so triggered about people wearing wizard outfits and talking about making Bitcoin magical again. So, I certainly think like they're a little bit more trolly than I personally am on social media. They're sort of experts at being trolls, and some people don't like that flavor of engagement. I think it's pretty funny. And also Udi and Eric, they trolled Ethereum people as well. So I kind of see them as like playing that role of offending both sides, which I think is very much needed.
It's great for attracting, a bunch of attention, and it's actually works in their favor when Bitcoin maxis get triggered. So if you don't want to give them attention, stop getting triggered by it.
Exactly. I find it quite funny.
Dan, and one question, about inscriptions, because they are issued on the layer 1, right? Do you think that it will be the same that if they're issued on layer 2, or is it like layer 1 has some, some flavor to have it, in the layer 1? Or what's your opinion?
Yeah, I mean, ideally, people want to interact with dApps on layer 1 because you don't have to go bridge your assets to an L2, and it's a little bit easier user experience wise. Ordinals, which what a lot of us are calling meta protocols. So meta protocols are on Bitcoin L1, but it's not an L2. It's just colored in on top of Bitcoin L1, where they've attached a meta layer to Bitcoin where people can view from a certain lens. Like if you have a different color glasses on, you could view with a different lens that some Bitcoins have different assets attached to them, or some Satoshis, if you will. So I think that the meta protocol space is very, very underdeveloped. And I think we're going to see a lot of cool things there, like atomicals, BRC20s, stamps. Like these are all the different types of meta protocols out there. So I think we're going to see kind of a whole beautiful kind of spectrum of different meta protocols that people can interact with. Ordinals have proved incredibly popular. Bitcoin NFTs sometimes have higher trading volume than Ethereum, and this is after 1 year. There's a lot of usage in the BRC20 sector. I mean, to be clear, BRC20s are a completely useless meme coin, but meme coins seem to be popular. And if people want to speculate with that, they're free to. They were also an open and fair mint. There was no central issuance of them. It was all minted openly and publicly. So yeah, I think that the success of ordinals have been kind of moved the Overton window on Bitcoin DeFi for both L1 and L2. I think meta protocols in L1, this like layered or colored coins, that this adds a really cool and very engaging dynamic to Bitcoin that I don't think we've truly grokked what that might represent in the future. Where you could do some things that are really sophisticated that might be a little bit more useful than just meme coins.
Yeah, I minted a couple ordinals early on, and I got airdropped like a runestone. I was like, okay, this is cool. Like I was getting airdrops and stuff. So playing with the ecosystem is actually fun, you guys. So you don't have to spend a lot of money to get involved in these things either, by the way. The biggest thing I would say is like learning about it, getting a wallet, like navigating it, right? Separate it from your hodl stash, right? Separate your main legacy wealth, and then like take a little bit and go explore these ecosystems, because you're absolutely right. Some of these ecosystems are going to they're going to rocket, right? Not only blow up, they're going to blow up like, right, literally like go to the moon. And so you want to position yourself, at least have a little bit of risk on some of these different asset classes to figure out like what this new world is going to look like. Is it going to go layer 1? Is it going to go layer 2 stacks? And so I would challenge people to actually go do some research, go get the wallets, go explore that, and see how that's actually going to play out, because this is not stopping. This is only going to get more and more attention and more money dumped into this ecosystem.
Totally agree. Yeah, this is again, spend a lot of time researching it. Only invest what you're willing to lose. Don't do it with your whole stash. But if you want to go explore this, if it is interesting to you, just go try it out with a little bit and see how you feel about it. So go, never risk everything. Look, there's a lot of ways that things can go wrong, but yeah, it's fun. Go download, Leather, Xverse, or Unisat. These are three of the most popular wallets out there. Put a little bit of money in it, play around with it, and be like, if this is for me, cool. If not, don't sweat. Just hodl some Bitcoin. Again, hodling Bitcoin, it depends on how good of a trader you are, but like hodling Bitcoin's probably your best bet. But if you think you've got what it takes, or you want to play around with it, as a libertarian, I'm all about it. So yeah, go explore it. But again, spend some time learning, like really learn it. Don't just LARP it, or don't just YOLO into whatever thing you see on Twitter or what someone told you to buy. Go form your own opinion about it.
But hey, dude, we appreciate you coming on. Any last thoughts on 100K before the halving, or no? Yes or no?
I don't know. This market feels pretty strong, and as Julio pulled up, I mean, we've seen some pretty incredible sort of scarcity develop here as these reserves get depleted. So I think 100K before halving is definitely possible. I would say it's like greater than a 50% chance. I mean, we've never broken all-time highs before the halving ever, which we already did. That's wild. That kind of blew my mind a bit. So yeah, I'm excited. I think it's greater than 50% chance we break 100K before the halving, but yeah, it's gonna be an interesting next month.
You guys, it's not priced in. Dan Held has told you this is not priced in. Go with
Definitely
the
not priced
OGs. Great to have you on today, guys. Remember to go to CryptoQuant.com to sign up, get a free account, and come check out all the data analytics. And we will catch you next time. See ya.